Some Western governments, corporations, and investors may now have material concerns about their exposure to China. As long-term investors, how do you think about weighing the risks of investing in China versus the opportunities?
We've always considered China to be a high-risk market. It's been a volatile market. The governance of China isn't as supportive of business as some more developed markets. So because of that, we've always charged a higher required rate of return to our Chinese investments. So because of that, we've always sought higher rewards for investing in China than for the typical country. Of course, there are some potential low probability, high negative outcome scenarios that we think about, but at the moment, they don't seem so high probability that it would make it impossible to find companies that we could make money in. One thing that I noticed, for example, looking at how weak markets have been and how most Chinese companies are still growing and profitable, when we compare the valuation of China versus the valuation of the rest of the world, the spread between China's valuations and the rest of the world is greater in terms of valuation than it's been in the 30 years that we have available to compare that. We see the downside volatility. We've experienced it over the past 3 years or so, and we've seen it before in prior periods as well. The odds still favor higher returns out of China than the average country that we would invest in. But the way we deal with the risk of investing in China is, of course, to limit our overall exposure, where we have strict limits on how much we'll invest in Chinese companies. We even think about how much China exposure our non-Chinese companies have. And then we also diversify within our China exposure, where we have investments in a number of different industries. Of course, given our concerns that have been long-lasting about the China real estate industry, we don't have any directly exposed to Chinese real estate, nor do we have any directly exposed to the Chinese banking sector. As any truly international investor must have, we do have exposure to China, but we're trying to limit it to a reasonable size. In the case of the international strategy, 8% roughly, which is roughly in line with its weight in the index, and then diversify by the companies and sectors we're exposed to.